So we were discussing the first problem on banking accounts, and we had looked at the problem and tried to solve certain schedules and also the profit and loss account in this. All right. So far we have done the first two items under it, the income and the expenditure, and we are yet to calculate how much is the profit for the year, transfer the profit for the previous year also, and then calculate what has been done with the profits, that is what has been done with the, or how it has been appropriated to various reserves. So let's see, we continue and we are going to now take care of these adjustments. We have already posted all of these items under different headings, under the different respective schedules, except for the balance of profit and loss of that year, right, of the previous year, that has been brought in. Okay, so whatever has been brought forward, we will calculate it accordingly. Now let's see. You've been told that you're supposed to make a provision for income tax at 35%. That means the current year's income tax provision on the profit we make during the year, during the current year. Alright, on that we have to calculate a tax at the rate of 35%. So it will be like a provision. And the rate of taxation for the previous year, that is 31st March 2019, it was also 35%. So we are going to calculate simultaneously for current and previous year. Then we have to make certain other provisions like dividend distribution tax. We have to transfer some amount of the profit to certain reserves like statutory and revenue reserve, and we also have to declare a dividend. Okay, we're going to see it accordingly. First of all, let's calculate the income tax. Now, this is the general process that we follow. We first calculate profit before tax, right? Simply taking the expenses, minusing them from the incomes, you get profit before tax. On that profit, we charge something called income tax. From after deducting that income tax, we get the profit after tax, right? And whatever profit remains after tax, that is the net profit for that year, that profit is either transferred to reserves, either distributed in the form of dividends, and part of it is carried forward the next year to the next balance sheet, right? It goes to the balance sheet, it is carried forward to the next financial year. Same thing is what we are going to do here. In our solution, we have already arrived at what is the income of the bank for the year and what is the expenditure. Now this is expenditure before calculating the income tax, alright. So we're going to calculate, or we're going to do some working notes in order to calculate the amount of income tax that we're supposed to pay on our income. So you have schedules here. These are notes to the profit and loss account. These are formal notes that form part of the entire solution. Besides that, you also have some working notes that you have to do in order to calculate how much is tax, how much are provisions, how much is to be transferred, and how much is the net profit. Alright. So let's see. In order to calculate the profit before tax, we require two things: total income, total expenditure. Alright. So let's take total income for both years. We are going to do current year and previous year. What are the total incomes? 50,702 current year. Previous year is 44,798. That's a total income. Now, expenditure we have still not totaled. Why? Because we have yet another category that comes under expenditure, that is known as provisions and contingencies. Alright. Now, what comes under provisions? Things like provisions for bad debts, provisions for income tax, all those other types of expenses that don't fit into these expenses, those will come under provisions and contingencies. Is that fine? So accordingly, we are going to calculate the income tax based on the totals of these two, interest expended and operating expenses. So if you total up the expenditure, and I will specify in the bracket that this includes only interest expended and operating expenses. Alright, so the total of these two, that is 34,766 plus 13,536 comes to 48,302, and the total of the previous year's expenditure, these two, comes to 42,798. Alright, so understand that we have to deduct, minus the total expenses from the total income. So after minusing, let's see what do we get. The profit before tax, that is minusing 50,702 minus 48,302, we get 2,400, and after minusing these two amounts, we get 2,000. Okay, 44,798 minus 42,798. So what is this called? This will be known as our, this will be known as our profit before tax. Simple deduction of expenditure from the income. Right? So you get the profit before tax. Now, we need to also calculate income tax on this profit. Okay, and the problem says income tax provision, this is the problem in the first half, income tax provision is at the rate of 35%. Previous year also it was 35%. So let's see, income tax, we're going to minus it. So income tax at the rate of 35%. So what is 35% of these? 35% of 2,400 is 840. Same way 35% of 2,000 is 700. Right? Then after minusing, we're going to just calculate profits for now and later on decide where all of these different items go. After minusing the tax from the profit before tax, we get net profit for the current year. 1,300 is of the previous year, 1,560 is of the current year. I'm going to highlight this. So we call this profit after tax, or it's also profit for the year. So this is the current year's profit, that is that particular year's profit. Okay. Now, income expenditure already shown in the profit and loss account over here. Your profit before tax will not appear in the profit and loss account. Income tax will come in the profit and loss account. And where do we show it? We are going to put it in your provisions and contingencies, right? So I'm just marking here that this income tax will come under provisions and contingencies. Alright, so that is where we are going to transfer these two amounts, 840 and your 700. Both of these amounts will go to your profit and loss account under provisions and contingencies. So let's transfer that. Provisions and contingencies doesn't have a schedule number. Amounts are 840 for this year, 700 for the previous year. So that with that we complete all our expenditure for that particular year. Now, what do we do with the current year's profit after tax? How do we appropriate it? How do we utilize that profit? So problem says that the bank transfers 20% of the profit to statutory reserves. Now this is compulsory. For the purpose of statutory reserve calculations, or the percentage is something that is given by RBI year after year. it every time in its monetary review that it has on a bi-monthly basis, it decides on what is the statutory reserve ratio, right, or the statutory liquidity ratio. Now, for the purpose of ease of calculation, we take it at the rate of 20%. It's usually around 20-25% and so on, but just for uniformity, so that everybody follows the same rate of statutory reserve transfer, we follow 20%. All right. So 20% of these profits, that is current year's profits, will be transferred to statutory reserve, and 10% will be transferred to the revenue reserve. Right. So I'll write it here. We are not minusing it. I've already underlined this and highlighted it. We are not minusing it from those amounts, but we're just making our calculations. So transfer to statutory reserve 20% and 20% of these amounts. So 20% of 1560 gives you 312, and 20% of 1300 gives you 260. Same way, another 10%, is transferred to the revenue reserve, right? So how much is 10% of, again, 1560? It is 156, and 10% of 1300 is 130. Please understand that these amounts are all in crores. They might look small, but they're all in crores. Okay. So all our working notes done, and this last adjustment we will see in the appropriation section. Okay. So we're done with all of those items. We have decided what we do with the profits. So accordingly, let's total up and complete our profit and loss account. So let's see here, total of the expenditure, all of these totaled up, 34,766, 13,536 plus 840. This gives you 49,142. Okay. Similarly, the total of all of these will give you 43,498. So that's your total expenditure. Total income, total expenditure. Now, time for profit and loss account. First, we will write profit or loss for the current year. Alright. Now, why I write the current year first is because we need to minus this from this and get the totals over here. Alright. So, just to avoid that confusion, with the previous year's profit, I first write the current year's profits. Okay. So, let's total up 50,702 total income minus 49,142. How much do we get here? Let's see. This total will be 1,560. Same as what we have got in the working note, isn't it? Profit for the year, 1,560. Similarly, previous years, 44,798 minus 43,498, we will get 1,300, same as what we have got here. It should be the same because provisions and contingencies are also included here. So that's the current year's profit. What about net profit or any losses that have been brought forward from the previous year? Alright. Now, where does this come from? This is basically opening balance of the profit and loss account and of the previous year. Okay. So let's see here. Let's see what the problem gives us. It says for 2019, the balance of profit and loss that was carried forward, which means of 2018, the profit of 2018 which was brought forward in 2019 is 1006. So we will put that in our problem here, that is net profit for previous year brought forward is 1006. Alright. So current years is not given to us, it's not provided, which means net profit or loss of 2018 which was brought forward, that is of this year 2000 and 31st March 2019. So whatever profits of this year which were brought forward to 2020 have not been provided, but it doesn't matter because we can always calculate it. So let's see. These are all the profits, income, expenditures of 2019. Using these, we can calculate what was the profit brought in during this year. Alright. So, before that, we also need to complete the appropriations. Fine. We can get the totals over here. Total of 1300 plus 1006. Again, I'll write this total 2306. Okay, we leave it to that because we don't have the net profit or loss of this to write over here for this particular current year. Let's see the appropriations. So what have we done with the profits? One thing we have transferred to statutory reserve, right? How much is this statutory reserve transfer? In the working notes, 312 and 260, right? Same way, transfer to revenue reserve 156, 130. So transfer to statutory reserve 312 and 260. Transfer to revenue reserve is 156 and 130. Okay. What other things do we do with our profit? What else is given in the adjustments? Let's see. Provision is done, statutory reserve, revenue reserve is done. There is a dividend. The directors have proposed a dividend of rupees amounting 200,000 for the year ended 31st March. And even last year, an identical amount of dividend was proposed. That means same amount of dividend was given last year also. Okay. So another thing done with the profit which comes under appropriation is the proposed dividend. It was 200 this year and it was 200 last year. Okay. Then there is also a provision for dividend distribution tax at the rate of 17%. Fine. Now on whatever dividend you have proposed, you have to pay a dividend distribution tax. So let's make a provision for that. Provision for dividend distribution tax 17%. So 17% of what? It will be 17% of the dividend which you have declared, right? So 17% of 200 is 34 and last year also it was 200. So 17% of that would be 34, right? Yes. So now we have completed all those items that need to go in the profit and loss account. So let's calculate what is the profit carried forward to the next year, the balance that has been carried forward to the next year. Alright. And how do we get that? For the current year, we don't have the previous year's net profit. That means for 2020, we don't have 2019's net profit. So 2019's figures are all here with us, isn't it? Income, expenditure, everything is there. So we have calculated that the total profit for 2019 was 2306. Now that 3006 we utilized or we appropriated it for all these other purposes, isn't it? Statutory reserve, revenue reserve and so on. So let's see how much is left to be carried forward. So 2306 minus 260, I am deducting all of these amounts from this total profits, right, minus 130 minus 200 minus 34 and you get 1682. So balance remaining after minusing all these appropriations from the profit of previous year and current year, we get 1682. Now what is this 1682? This is the balance of profits carried over to the balance sheet. Basically, balance of profits that is carried over to the next year. So if this is 2019's profit and loss balance, where will it come? Under the 2020 column, 1682. That means net profit or loss brought forward from the previous year. So this is of the previous year and now it has been brought forward over here. Alright, 1682. So now our column for 31st March 2020 is also complete. We have our income, we have our expense, and now we will complete the rest of it by calculating the profits. So total profits after adding up current and previous year, we have 1560 plus 1682, that is 3242. So that if we utilize or we do the appropriation and we minus all these other amounts from it, like 312 minus 156 minus 200 minus 34. What do we have? 2540. So the balance of profits of this year, which will be carried forward to the next year, that is 2021, all right, 2021, that will be 2540. Okay, and if you just total this up, you will get the same total as over here, 3242, and you have 2306. It has to be the same because we have taken these profits, current and previous years, we have utilized them in certain way, and whatever remains we have carried forward to the balance sheet. So these two totals should always add up to the same as these two totals of the profit and loss of both the years. Alright, so that was a solution to problem number 1. This is how the profit and loss looks like after we have added up all of those items. These are our notes to the profit and loss, which are in addition to the amounts that we have written, an explanation to the amounts that we have written, and finally these are some working notes, right? Additional calculations that we cannot show directly in the schedules, or we cannot show directly in the profit and loss account. We have to do these calculations separately and they are to be shown separately.